Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after Friday's washout, with most of the currencies taking heavy tumbles, as in the Australian dollar, the euro and the sterling, the Australian dollar has managed to rebound in front of the level of 68.60. From that, the technicals have improved somewhat. Behind that is the fact that the US dollar, which measures the greenback strength against a basket of 6 major currencies, lost momentum on Monday and staged a pullback by around 0.6% after dropping away from a fresh 20-year high. That is from 109.42 to 108.70 this morning. The falls on Friday emerged after US Federal Reserve Jerome Powell told a gathering of central bankers at the Jackson Hole Economic Symposium in Wyoming that the US Fed would act forcefully to control inflation, though it would result in some pain, that is, for households and businesses. He went on to say while higher interest rates, slower growth, and softer labour market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation, but a failure to restore price stability would mean far greater pain, Powell said. In July, the US Federal Reserve raised its key interest rate by 0.75 base points, targeting a range around 2.25 to 2.5. In the September 21 meeting, it is ascertained that we could see another 75 basis points. However, we still got certain data coming out before then. That is on September the 2nd, we get the August US jobs report, or the non-farm payrolls, followed by September 13, which is the release of the US inflation data. And then following from that, the US Federal Reserve rate decision is on September the 21st. Looking at the Australian dollar, as I mentioned, the improvement from that key level, which was at 68.60, the market is now looking for a further test up, and that is towards 69.15 and maybe on towards 69.60. But I would like to see the MACD also support further encouragement to the bullish case and the RSI break through the midway point. But there is a teeny little bit of divergence here, as we can see, as the markets did take a stab to the downside. The MACD was still holding to its momentum. Although there is much talk that the European Central Bank policymakers want to discuss a 75 base point interest rate hike at its September the 8th policy meeting, even though recession risks loom, the momentum for the euro has also found ground to support further gains. After rebounding off the level of 98.80, the market is now looking up towards the region of 100.15 to 100.70.75. Along with that, with the dollar failing to sustain above the 20-year highs of 109, does give further encouragement that the market could actually gain further and see a little bit more weakness in the US dollar. Any pullback should find support still around 98.80. The dollar yen story still remains somewhat bullish, but there is some divergence to the bearish case here. So therefore, any advancement, I feel the market will probably reject that top side around 138.80 and above there around 139.50. A little bit hard to pick a top around this region, but nevertheless, we are heading into the bear zone, as I would put it, and maybe see an ambush and then eventually see a pullback towards 136.80. The sterling, well, the market did stage a rebound in front of that level of 116.45, but I felt the market may find support around 116.05.15. Nevertheless, the demand coming back and bullish divergence clearly seen from this indicator of the RSI free period look back should support further gains, and that is up towards the region of 117.30 to 117.1995, and with a key resistance around 118.60.80. Any pullback should still find support from that bottom side, anywhere from around 116 figure to 45. The outlook for gold has found some support, because it did stab the lows around 1,720. I had support around 1,722, but from the rebound, I'm now back. Looking a little bit more to the recovery side, could see further gains into today's session, and that is if we see a move further beyond 1,742. That would put further gains to the road of the upside of 1,762 to 66 and reassess. Any pullback now sees support around 1,730. Wrapping up with oil, well, the market reached its top side objective. That was at $96 a barrel. I still feel there is a little bit more upside gains, but if we see we see a close above 96.55, then I'm looking up towards $98 a barrel and reassess from there. Any pullback could be as deep as $93 a barrel, but still overall the market has potential to see further gains after rejecting that midway point. So I'm not bullish in the short term as of present, and let's see if the market can clear and close above 96.5. Well, that wraps it for the morning. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the day.